Hey everybody, good morning. It's Pete. Welcome to today's episode of Stocks for Breakfast. Super happy to have you here with me today. If you like these videos, by the way, please click down, give us a like and subscribe. But just as important is if anything we talk about challenges something that you think, or if it's something new, or if you have a big obstacle or challenge that you can't get through in your trading. For example, maybe your losses are too big. Maybe you just can't find good ideas. But the ultimate problem of holding your winners longer is something that you need to work on. It's actually a good problem to have if your biggest problem is you're in the right trades, but you're not making as much as you should. Absolutely leave a comment down below the video, and as soon as I can, I'll either reply in your comment with as good of an answer as I can in that little blurb, or I'll make a follow-up video and I will message you in the comments telling you that I will where I did it and where I took care of it and which video you could watch. Today we're going to talk about something really interesting, and that's a common discussion that we're having both in private messages in our private community and emails that I'm getting, which is, why does the market keep going up right now when everybody's out of work, and all that whole conversation around we should be going down, we should be collapsing, nobody's at work, nobody's paying their mortgage. At least that's what we're reading. Again, I'm not getting into politics or anything there. But paying attention to what is happening versus what you think should happen next, or what should be happening next, and just getting to the point where you separate the difference in learning how to read the tape, learning to have a bias, learning to read the current order flow versus what you believe should be happening. And believe it or not, most money in trading is lost by trading your opinion versus trading the bias of what's actually going on in the market at the moment. So we're going to talk about that a little bit, because not only will you avoid, I want to word this properly so it makes the biggest impact for you. Not only will you avoid low probability situations, not only will you be fighting, not only will you not be fighting the current order flow. For example, right now where the market just keeps finding this bid and we just keep trading higher and higher, you'll also not be throwing money away in those poor situations. But just as importantly, is you want to be making the most money as humanly possible within your experience and capital, while it's obvious. It must be, I'm trying to word it properly so that you can implement it quickly. You must be on top of what's going on right now in the current moment, and not project into the future where you think something is going to go, or airlines should do this, banks should do this, tech stocks should do this, oil should do this. Get that garbage out of your head. Yeah, maybe you might be right over the long term. But we're talking about whether it's a trade for an hour, or whether we're going to discuss a swing trade together where that swing trade lasts for a month, or between earnings seasons, or whatever that happens to be. That's the only thing that matters. The only thing that matters is the bias of bullish or bearish. So in other words, who's in control right now in the time frame that you're trading. You absolutely must continue to trade that bias based on your tape reading analysis until you see a reason not to. And it's interesting to see new traders come into the coaching program, send me emails saying, I don't understand why the market keeps going up every day. There's two things there. Number one is just pay attention. Number two is the fact that you are reading the fact that it's going up every day and you should be buying. The next step, or the proper question, is how and when should I be buying so that my risk is the lowest and also justifies the trade, because there's potential reward for putting money in harm's way. So I just can't stress that enough. If you're finding yourself frustrated, especially as a trader, my pal John yesterday actually said to me that his longer term trades that he's not even watching are going up with consistency, and sometimes the shorter term trades where we're trying to fine tune entries and exits in and out of positions they don't feel like they're growing as fast, because the market apparently is, not apparently, but it is just kind of slowly grinding higher. individual stocks more so right now than the market, and specifically the market indices. And I'm going to show you stark contrast right now, and specifically how that relates to actually placing trades and your conviction level in trades. If you've been in the coaching program, if you're part of the private community, you know I'm always talking about your A-plus trade. You need to know what your A-plus trade looks like, because those are the ones you should have conviction. Those are the ones you should pull the trigger on and get into those trades immediately, never hesitating. Let the edge do the hard work. But then anything that moves away from your A-plus trade, your conviction level should start going lower and lower. And you eventually get to the point, why bother with these trades? Which actually is kind of a funny thing, because a lot of traders feel that reducing their share size because it's not an A-plus trade anymore somehow makes it a better trade. It doesn't. It's either a great trade or it's not. So lowering your share size doesn't change the fact that it might not be a good idea. It just feels less, it hurts less when you lose less, right? So anyway, the point that I want to make is when we're reading and paying attention to what is going on, you start with the market and you say, where is the market? Do I have all of the wind behind my back? Is the market lifting all boats? And some of it is yes. NASDAQ right now is tearing through new levels. Apple, we'll take a look at in a second, is very close to 52-week highs again. NVIDIA and a few other stocks have already done that. Facebook yesterday. And then you get other stocks like stocks in the Dow, which are pretty much flatlined, most of which are flatlined. And we'll take a look at the stark 6-week trading range that we're in the NASDAQ. In the Dow. And the SPY is kind of like just now peeking through those weekly trading range levels. So again, you have to pay attention to what is happening, not where you think it should go, but what is happening now. What is the greatest probability of follow through, whether you're holding a trade for an hour or for the next 3 months, and then only trading that. But here's the key. You need an if-then scenario. As long as this is happening, I'm continuing to be a buyer. Until XYZ happens, then I will become a short seller. Or maybe if you don't like to short sell, so in other words, if these situations reverse, so for example, in the community, we're talking about we're going to be long as the SPY weekly chart is well bid. Something as simple as that. Then you can drill it down even further. And with more conviction, as long as this week is also positive from the open. And you start to, there's 100 different scenarios that we talk about to build the argument. Those are just like the two basic ones. As long as that scenario is still in place, you can confidently look to be a buyer. And you should be ashamed of yourself if it's obvious and you're not making money. And then you need to be able to recognize if and when it reverses, and what you plan to do if and when it reverses. Now, the last step is actually fine-tuning your entries. The hardest part of trading for someone learning a new system, for lack of a better way of putting it, like people that come into the community and they start to learn order flow, they start to learn how to read the tape, is you spend all that time and energy, as you should, finding great ideas. Then the next step is how and when do I actually get in? Because you get to a point where you're like, I need confirmation. Okay, I need a little more confirmation. I have the idea, now I need a little more confirmation. Then you eventually get in when it's too late. As soon as you get in, it reverses, and then 2 hours later, 2 weeks later, 3 weeks later, it does exactly what you thought it was going to do. The last part to solve that problem is you need to do what we call work the keyboard. You need to anticipate what you're going to do long before you plan to do it. So if you have a big list of stocks, there's only a few of those stocks more likely that you can take advantage of, depending on your buying power, depending on your skill level, depending on your attention span. Find those few stocks that are doing exactly what you expect them to do from a tape reading perspective, and then stick with them and do not miss that entry. Again, I'm going to use a strong word here. You should be ashamed of yourself if a stock you created a game plan does exactly what you planned and you missed it. Shame on you. You did all that work, you put it all together, and then it does exactly what you expect. You're supposed to get paid, and that's on you. But that's focus. All of the stocks you could be watching, shut off the scanners, shut off everything, and get to the point where you're like, okay, I did my work. These 3 stocks are performing exactly as I expected. Now I have to stick with it and just look for the entry signals that justify the reward for the next trade. So I'm just going to highlight very quickly here exactly what I mean by knowing what is going on and paying attention. So you can see here clearly on the Apple weekly chart, we have been trending higher since the March bottom, and we've never looked back. You should only be looking to be long the stock, which means then you drill down deeper and you start to fine tune your entries. But when you get to the Dow, and well, actually, this is actually more stark on the weekly chart. You can, the daily chart, you can actually see that the Dow and stocks in the Dow pretty much have not had a strong bias. And the SPY just yesterday peaked outside of the range, and today we're looking to see if it's going to stay there. So if it stays there, what does that mean? So we can still continue to trade long, but the market itself from a day-to-day basis is not giving us a clear conviction to have the wind behind our back. But if you take a look at the Qs, you'll see that's one of the reasons that we've been looking at tech stocks so much. So you start to look at stocks like NVIDIA making these new all-time highs. You start to learn which stocks to be in. It's just a question of whether you can get them at a good price that makes sense from a trade perspective. So to wrap the whole thing up, I just can't stress enough, don't project what you think should happen in the market and what should happen in your stocks. There's a theory in chart reading and in technical analysis that everything, all the news that is out there about a stock is reflected in the price. And to a certain degree, that is correct. And really, what other choice do you have? Are you going to out-research hedge funds? Are you going to out-research banks and all of these huge investment companies and investors? Or are you going to just let them do the work, pay attention to the footprints of the order flow, and then just hop on board? So pick a side and pick a spot. Don't project what you think should happen. We could save that for a cup of coffee on a Saturday, right? So anyway, this is an important video because the market continues to have this slow grinding move to the upside. NASDAQ stock's a little bit stronger. And unfortunately, I'm seeing some people frustrated because they're looking for it to turn around. It will eventually turn around. Maybe even go into a trading range. Who knows? I don't care. Right now, it's going up. Let's make money on the way up. Have a great day, everybody.